Hey, Richest, you money maniacs, welcome back. In this video, someone dared question my authority.
And you will respect my authority.
And my opinions. So, let's find out how I responded. Let's get to it. Hey, Richest, you money maniacs. Tom coming at you. Thanks for tuning back in. This video is going to be a special review of comments that I got from Shane West. Shane, first and foremost, thank you so much for watching our videos here. And even better, thanks for commenting and having such a wonderful conversation about the topic that you were discussing. I wanted to go through point by point and share your comments and my replies with them so that everybody out there, all of our viewers, have a chance to kind of think for themselves and go and do their own homework too. And maybe even draw attention to the references and the information sources that you gave for them to go study too. So as I said, Shane, at the beginning, thank you very much. I really appreciate it. And even better, I am not omnipotent. I don't know everything, and so I'm always curious of other people's perspectives and other people's experiences. So I appreciate you sharing that with me. Even though we did disagree on certain points, maybe eventually we'll come to see each other's perspective more clearly. And so again, I say thanks, and I'm very excited to share your comments and my replies with everybody through this video. Let's get right to that. Shane said, first and foremost, S&P 500 index funds are a great tool for the average investor who does not have the time nor the desire to research individual companies and industries themselves. All they need to do is determine which funds provide the returns that best match their preferred investment style. Dave Ramsey has even suggests mutual funds for those who do not want to select funds on their own. So here's the comment on just that first part alone. That is exactly what caused the crash, the real estate market in 2008. It was the subprime mortgage pieces. They were all bundled together and they were all marked by the experts as grade A mortgage payments. Everybody's mortgage in this bundle and this index fund and this fund are all grade A. And then it turned into, well, 90% of these are grade A. Well, 80%, and some are A minus and some are B plus. And then because nobody was doing their research and nobody was actually following up on how are these actually being graded, it became C's and D's and a few A's, and it would be falsely marked as an A. So investors would continue to invest in the fund. Watch the movie The Big Short. It's all explained in detail in layman's terms. That is exactly what's happening with S&P 500 index funds right now, because investors, you, whoever's watching this video, are not taking the time to do your homework on the companies you're investing in. You're being lazy. You're taking your mouse and you're clicking and buy, sell, buy, sell. Ooh, look, that chart looks good. I'm going to go there. How do you think they make those charts look good? You think that things are not being manipulated right now? That things might be bundled together and marked falsely? That won't occur again? Every federal law that was put in place in 2008 to stop the banks from creating that situation again has already been repealed. You are naive or uninformed or just basically ignorant of the fact that that is exactly what's happening with the index fund. Now, Shane, I'm speaking to you directly. Please do your homework on that. Michael Burry has a lot of really wonderful information that will help you understand it better. Don't be offended. Just go and look it up. It's not that I know better. It's just I found it a little sooner than you did. Now, your comments maybe a few years ago or maybe 10 years ago probably would have been accurate, that the standard for those industries and those index funds would have been held to a higher standard and that the quality would have been assured. But ever since 2008 and maybe even before, that is not the case. And you and I both agree that there is manipulation going on. So don't think for 1 second that that isn't exactly what's happening again. So this is Shane responding to my comment, and his second paragraph is, the advice that was given by Warren Buffett was actually very sound given the historical returns of the S&P 500 over time. If his advice isn't enough, read some of the common sense investing advice from John Bogle. The fact of the matter is, The idea of investing in a market that has been proven beyond the shadow of a doubt to be unreliable, manipulated, using misinformation, completely crony-oriented, completely geared towards saving the largest, most successful, or biggest corporations. Not successful, they should fail, but propping up fake corporations, zombie corporations. Any advice that suggests in purchasing any kind of value in a market like that has to be at the very least, questionable. At the very least. And from someone like Warren Buffett, who knows that the world looks to him as a leader, for someone like him to make the suggestion that things are still just business as usual is downright sinister. And I will stand by that till the day is long, Shane. I apologize for nothing. The fact of the matter is that guy knows that if people don't buy his shares right now before it crashes again, he's going to be left holding the bag. Berkshire Hathaway will be in a world of hurt and maybe even follow the footsteps of Lehman Brothers. So there's a lot of fear in that for him. So for him to say, yeah, it's still a great time to invest in the market, there's more to it than just, oh, well, the market always bounces back and you'll make 4%. No. He has a very specific plan, a very specific goal, and he's making sure that he has people who will buy from him. So you check the numbers. You don't see any big fund managers buying from Berkshire Hathaway. You don't see any large corporations purchasing from him. The only one purchasing from him are retail investors and maybe the Federal Reserve or BlackRock, funded by the Federal Reserve. The fact of the matter is anybody who understands what's really happening is staying away. They are trying to get out desperately before it completely collapses. And it is a house of cards. So back to Shane's response. Again, just like Mr. Buffett suggested, something for the average investor while choosing an alternative investment strategy doesn't imply a sinister or misleading suggestion. Well, I just answered that, so I'm not going to repeat it. Consider that Warren Buffett and the average investor have completely different investment goals. The average investor is preparing for retirement. Huge mistake. Buffett is protecting the interests of his shareholders. Exactly. He was forthright when he told the public that he liquidated all of his investments in the airline industry, something that his investors weren't particularly fond of. Okay, so again, he was honest about liquidating, but the fact of the matter is he is getting out of the market. Now, Shane continues, again, as to Hertz, you still do not address the point I made about the usage of the fundamental analysis to conduct a valuation of their firm. If you want an example of what I was highlighting, and not merely what is available via a Google search, check out their 10-K filed with the SEC for year-end 2019. Scroll down to page 82 and actually review their balance sheet, income statement, and statement of cash flow. Look at how heavily burdened they are with debt and have been for years. Also take a look at their growing accumulated deficit. Their margin of error was so low, it is not a shock that COVID-19 put them out of business. Shane, that is a wonderful suggestion. I'm so glad that you wrote that in there so that other viewers will know how to go and look this stuff up for other corporations also. Thank you for doing that. But that was not my question about Hertz. We agree that they were positioned poorly. So thank you very much for explaining how to do that. As to the crony manipulated fake money stock market and the 4% scam, I invite you to ask yourself how an individual would be burdened by taxes if invested in a Roth IRA. Contributions are after tax, but distributions are 59.5. After 59.5 are tax-free. This is not a burden. There is no such thing as fake money printing. So first, Roth IRAs are wonderful unless you have more than $50,000 a year you'd like to invest. So yes, Roths perform very well. Definitely use them if you don't plan on putting away more than $50,000 a year. Although I still would actually encourage you to use a laser fund instead. It probably is going to perform better in a couple different areas. In fact, there are videos in the comment I make that I respond to Shane. I give a link to a video that you can look at, which explains the difference between a 401k, a mutual fund, and a Roth IRA and real estate versus a laser fund. And so you'll still probably want to invest in a laser fund. However, if you'd like to take the Roth IRA path, be my guest. Absolutely. Shane continues here. There is no such thing as fake money printing. The Fed can print all it wants with the understanding that inflation is likely if not backed by debt. No, that's false. Actually, it will increase whether there's debt backing it or not, because it's just fake money. It's fiat currency. And it's not money, it's currency, which I correct myself later. Which is almost always what happens. Backroom manipulations, GAAP and non-GAAP reporting is rampant. I will agree. There we find some common ground. Accounting fraud is likely to happen at any given time. I will agree. Especially when you're talking about trillions of dollars and careers and livelihoods and entire families and entire nations on the brink of collapse and all that at stake. We're talking about things worth killing people for. That's what we're talking about, especially in the minds of certain people in the world who really are interested in maintaining their position of power. Accounting fraud is likely to happen at any given time. I will agree. Okay, so Shane continues here. But these aren't new phenomenon. Exactly. Thank you, Shane. This has been taking place for decades, and the S&P 500 still has historically returned an average of 7%. 7% versus what? Exactly. On top of the fact you're not taking into consideration the rise in taxes, the inflation adjustment, and all kinds of other elements that take that 7% out of your pocket. Shane continues with his next paragraph. I respect your disagreement. However, I respect your disagreement, so thank you. It is a fairly lazy accusation to say that everything is a manipulation game and that everyone suggesting investing in public markets is being misleading. Yes, I agree that it is currently overvalued. That is evidenced by That is evidenced by comparing total market capitalization to annual GDP. It has been overvalued since our last recession. Fundamental analysis is the best tool that anyone can use to gauge whether or not a stock valuation is accurate or not. I highly suggest you read The 5 Competitive Forces That Shape Competition by Michael Porter. Great suggestion. I will read it. And I really appreciate that we're agreed that it is overvalued. And I actually address the lazy accusation in my response to this. So I'm going to finish his comments and then get into my response. Also, I cannot stress this enough. Laser funds are an absolute ripoff. Here are a few examples. He left links, and the great thing about the links is that actually what he's confusing is that the laser funds, the challenge that they had with the laser funds with Live Abundant was that they were accused of selling shares without broker's licenses. So they got in trouble for having some of their staff sell shares without broker's licenses, which is illegal. You're not supposed to do that. And that has been since corrected since 2017. But that isn't how a laser fund works. A laser fund is not the buying and selling of shares like a regular mutual fund. A laser fund is a tax-advantaged insurance contract, and so therein lies the challenge with that accusation. Yes, Live Abundant did have a challenge with that, but they've since corrected it back in 2017, and they have not participated that way again. But that does not detract from the performance of the laser funds, the real laser funds, historically. And I have my own personal experience, but I'll share that in my comments. Shane still has one more comment to share. I agree with you that the market will likely provide poor returns for the next few years. The dust must settle first before we can accurately predict where it will all go from here. I also believe in investing in precious metals. Good man. To some extent, real estate. Yep, once the bubble bursts. From my view, I think buying in today is an unwise move. Agreed. But then again, we return to my point that the bull markets historically have always outpaced the pullback from the bear markets, always by manipulation of a central banking system. The market has never been allowed to correct properly because it has not been a free market since the Federal Reserve was instituted. So just keep that in mind. Now let's get to my response to Shane's last comments. So the first thing I did in my comment was to give the link to The Index Funds Are the Next Bubble by Michael Burry. This is already happening. No one believed him in 2008, and again, no one believed him in 2020. I would bet he's making great wealth right now. Concerning Buffett, I disagree strongly. He has a very specific goal: make more money. You know what? Good for him. I simply make people aware of the duplicity of his positions versus his actions. Hyperinflated markets are created by central banks and monetary policy. This is not news. It's not because of the GDP. It's because of monetary policy. So while you're trying to argue your point, you're missing the very fundamental basic fact that because we use fiat currency and the Federal Reserve inflates that currency, that's what causes the discrepancy, the inflated bubbles. Hertz, we agree. However, my question was, why is their stock being sold on the stock market after filing bankruptcy? Still illegal. People need to be aware that this is illegal and ill-advised. Roths are great if you only want to save up to $50,000 per year. You're right. There's no such thing as fake money. I apologize. I meant to say fake or fiat currency. The entire globe uses only fake currency. This is by definition not subjective opinion. It's great we have common ground on the manipulation. So again, thank you, Shane. You're exactly right as far as everything being manipulated, which is why I think it's irresponsible to even suggest that someone invest in the stock market at this point until the dust clears, as you put it, and the dust includes proof that reporting is actually accurate. I mean, even the government at this point is reporting fake enrollment numbers. It's gone so completely out of control, and there's no accountability, that no information coming from any major source at this point, especially the news, for crying out loud, can be trusted. You are forced to go and do your own research at the source of the information yourself, and then to try and figure it out and understand it. Now, if you can't do it or you don't have the time, the people that I listed in my comments, you should definitely listen to. And that would be Robert Kiyosaki, George Gammon, Doug Andrews, Dan Pena, and Mike Maloney. Sorry, Mike, I had a little trouble remembering you there for a second. All right, so back to my response. Thanks for the suggestion. I'll take a look at it. While I do agree that discernment and research is always the best approach, the extraordinary amount of misinformation and manipulation occurring as I write this is historic, as in, never been experienced at a global level like this before historic. Therefore, I feel strongly that any approach involving stocks would be irresponsible. I have no confidence in the reporting that's occurring, thus no confidence in the market. While there was a challenge with shares being sold by unlicensed brokers, since corrected in 2017, my two laser funds have performed beyond my wildest expectations, especially during the current downturn. This is a personal experience I'm sharing. Doug Andrew has been a financial expert for 45 years. LiveAbundant.com has practiced unfailingly for most of his career. Laser funds far outperform almost every other investment tool. Please reference my video and several others. Please look in the comments for that link. For your convenience, here are the IRS codes that make the laser fund, or rich man's Roths, possible. 101A, tax-free death benefit. 72E, insurance growth, tax-free. 7702, access death benefit tax-free, and the laws of your financial planner, and the laws your financial planner must consider when structuring your laser fund to function properly, really, are the TAMRA, 20% over 5 years, TEFRA, and DEFRA. Another point of common ground that it's not a good time to invest in the stock market. I would only amend your timeline a bit. I firmly believe it will be much more than a few years to recover from this, simply because the collapse has only started. Also, once it has, quote unquote, recovered, an investor would have lost years, probably many, of earning potential, and taxes will most certainly be significantly higher due to the unprecedented spending/printing that's occurring. More than all the major wars the U.S. ever participated in previously. Thanks. So, Shane, thank you again for these wonderful comments, questions, and even the debate. I really appreciate the back and forth. And more than anything, I hope that you take the information that I've provided and maybe learn something new that you hadn't known. Laser funds are not mutual funds. It's not a fund that invests in stocks. It's a tax-advantaged insurance contract, but it's also indexed against the stock market. So it's not in the market, but it does profit more when the market goes up, because an insurance company's book of general accounting automatically makes you 10% every year. You can increase that by a multiplier with the right company if you want to, but it's still an insurance piece, which means that all of the protection that the insurance industry has, you get also. Now, we don't call a laser fund an investment tool. At least I shouldn't, because you don't want it to be called an investment tool. You don't want investment rules and regulations to be applied to it. You want it to be considered an insurance piece, because that makes it tax-free. That also means the interest that you earn off the principal is tax-free. That also means you can borrow against it tax-free, and you don't have to pay what you borrow against it tax-free, because your death benefit when you die covers all those borrowed loans first. So I hope that explains the difference between what I think you thought a laser fund is versus what a laser fund actually is. It's unfortunate they had that challenge in 2017, but what is that compared to what's actually occurring right now with our own elected officials and the Federal Reserve? We're talking about a private bank that has been legally allowed, to print money out of thin air just by typing numbers into a computer, trillions of dollars, then give it to BlackRock, a private corporation, to go into the stock market and buy stocks on their behest. I mean, that is completely against the charter of the Federal Reserve Bank, and I'm not a fan of their charter at all. On top of now, they're completely handing trillions, billions, hundreds of billions of dollars to their friends to go in and buy what? Well, what stocks are BlackRock buying? Oh, well, they happen to be buying the stocks that they hold. It's just ludicrous what's happening right now. The American people are being robbed blind by these people, this crony fake currency, fake market, fake news, fake everything. And Shane, I hope that this video has opened your eyes at least to some of the cracks that have appeared, because they are canyon-sized cracks now. And it's nearly impossible to miss them if you just go do what you suggested. So as Shane, you suggest, make sure everyone watching this video, before you make any kind of investment, especially in the stock market, my God, do your homework. Stop being lazy. Go look this stuff up for yourself, and then double check your sources. Absolutely double check your sources. And again, don't take my word for it. Doug Andrew, Mike Maloney, Robert Kiyosaki, George Gammon, even Tom Wheelwright. I mean, these are Dan Pena. These are guys who know way more than me and have far more success than I do. If you don't believe me, listen to them, because they're the ones I study very closely and then go back and do my own homework too. Now, the last thing I want to mention is, in my response about all the wars combined, all the war spending combined, We are approaching the point of spending $10 trillion in just this short little period of time. In just a few months, we're talking about just a few months, $10 trillion. That is more than the World War I, World War II, the Vietnam conflict, the Korean conflict, Afghanistan, everything combined, all the major wars combined. $10 trillion in less than a year. So the insanity of that, if that does not strike you as completely insane and it does not make you aware, now keep in mind, talk about your $10 trillion. How much of that 10 trillion would it actually take to manipulate the market to make it look like it's okay? To convince people to put their hard-earned dollars in there to get your friends out safely, like Warren Buffett and other large corporations? How much would it take of that 10 trillion? It wouldn't take the whole 10 trillion, you can be sure of that. So, as a final summary, Shane, thank you so much for this wonderful conversation and the ability to be able to respond to you. I'd be very interested in looking into the book you suggested. I would warn everybody who's watching this about the suggestions. Make sure you know the difference between Keynesian economics and Austrian economics, because it's Keynesian economics and fake money systems and central banks that brought the entire globe to this point, which has never happened before in history. Never ever, not even with big empires, the Roman Empire, the Byzantine Empire, the Sumerian Empire, it never encompassed the entire globe before. Way to go, Keynesians. You've really set the bar high. All right, thanks everybody for listening. Hopefully you found value in this. If you did, please give it a thumbs up. If you didn't, or Shane, you really don't like what I'm saying, give it a thumbs down and make another comment. We'll start another conversation. Even more important, if you haven't already, be sure to subscribe to the channel. All right, you guys, see you next time.